Yeah, so I know Goldman. Everybody's involved now in this, which is good because I think it's mandatory. Otherwise, as you know, I believe the Fed has failed miserably if they can't get this done. So yeah, there's people, but again, from the technical perspective, we're stuck at this, as I keep talking about that 200 week in the euro, which also sets up with the 200 week in the euro currency. So it's been a pretty good pivot. We've been through there a couple times, but it doesn't sustain itself. Okay. All right. So were there some questions?
Yeah.
We've certainly seen the metals perform as they ought to have.
Okay. So, and that's where a lot of the questions are going to come in.
Okay, good.
In with my mind, and I just got a question with, I'm not, I asked for him to be a bit more specific, but gold and precious metals, please ask Ira about gold and precious metals with DXY. And I just asked him Andrew to be a little bit more specific. Andrew, would you like to ask a question in general on your own? But while Andrew's doing that, Ira, he's in the UK. So I wanted to ask you just a follow-up question and a clarification from last week's conversation and the article that you sent me from Bloomberg about the Fed, about the Treasury sitting on record amounts of cash. So with that being said, and we've got the Treasury, the Fed as a backstop and continuing their 80 billion repurchase program or purchase program every week, and expanding their balance sheet as they are, and all this money on the sidelines with the Fed, and then also the sidelined money by all the investment grade corporations. That is then, as we come into the end of the week, see gold holding some key levels on the downside, and then starting that trek back up, and silver starting to follow. And then you've got the weakness in the dollar, all of that coinciding with all of the bankers and hedge fund guys and PMs across the world saying that they're back in equities. They are bullish equities.
Wait, who's saying they're bullish equities?
It's been talking points in Bloomberg on TV, right. And CNBC right. Specifically. I didn't look. I mean, it just, one after the other. I did see an article today on Sunday over the weekend by, I forget what his name is. Wolf something or other. He was talking about why he's short equities. But in the meantime,
yeah. Well, there's certainly, you know what? The global macro, are we live now?
Yes, we are.
Okay. So the global macro crowd, which I put myself in that camp, has been more bearish of late. You've heard it from Druckenmiller, I'm underinvested, Tepper, Daniel Loeb, and even, let's go to Ray Dalio, Tudor, because those are the true global macro guys. Certain guys like Loeb, and I mean, they're good stock pickers, but I don't put them in the camp of Druckenmiller at all. So they've been underinvested because, again, as we've discussed many times with you, the fundamental structure of this market is very questionable. So it's hard to be overly invested. But then you get people like CalPERS, and who are talking about leveraging themselves up because why? They have to create greater returns, or they've so badly underperformed the market and they have obligations. So you have this, and where are you going to go invest? Tell me, where are you going to put your money? You're going to buy 10-year treasuries and hope that the country goes into deflation because that's what you're hoping for, because that's the only way you're going to make money. But if the Fed has their way, as other central banks, as a combination, and they get inflation, your 10-year treasury purchases, and I'm talking about from an institutional, I'm not talking about traders. We have to separate those two out. But from the overall global macro theme, then you're a gigantic loser. And I don't care whether they do yield curve control or not. You're a loser because what will happen is that the market and market participants and those who are liquidating some longer term treasuries because of the huge negative yield that will occur on them will keep selling and pushing up against the ceiling. Now the Fed can hold it there, but that's a shitty investment profile. Well, I'm not going to lose. Yeah, you know what? I watched people do the same thing in the Euro-Swiss cross, and then they got crushed in January of 2015. Eventually, the market will give. It's like water pressing against a dam. If it finds its weakest point, it will. Now, how long will the Fed be able to hold it? Quite a while. But that's a terrible investment strategy. So people are looking elsewhere. So you can look to equities because there are certain companies, but the whole structure of the equity market is being based on Fed and ECB money, and it's just vast amounts of liquidity poured into the global system. So it pushes you to do that, but you better be nimble and quick, even as an investor, nimble and quick. But really, where are you going to go? Where are you going to go? And if everybody says, well, I'm going to go to cash, you can bet that the Fed goes to negative interest rates because they have to make holding cash poisonous, toxic, better word. Toxic.
What does that do? What does that do with the amount of money that the Treasury is sitting on?
Nothing, because the Fed can print all they want. So nothing. They're going to sit on that anyway, and I still maintain that they're sitting on it because they're seeing some of these revenue numbers, meaning all types of taxes that come into the federal coffers, and they are going to be abysmal. So again, they're building a big cash hoard because they're trying not to make the budget process an issue come September, October, heading into the election. That's my sense of it. Could be wrong, but that's, after doing all my reading, that's my sense that's what they've built such a cash hoard.
You got Weidman. Weidman came out a little bit ago saying, I think that I'm wondering, it's kind of a Captain Obvious saying that the recovery from the crisis will be painfully slow. But I'm wondering what he means by that. What would be the main comment what would be the main crux of what he's saying underneath that?
Well, we don't know. There was also a story, I don't know whether the FT ran it, I read it last night, about somewhat of a change of guard at the German High Court. Again, the discussion, then there was another, I read some of the German media about the AfD, the Alternative for Deutschland, slipping badly, that they're fighting among themselves, and Merkel's on the rise. And Merkel may be on the rise, and I'm not a Merkel fan, but she, I think, with Lagarde's help, has really woken up, has really woken up to, hey, you know what? I basically trapped myself by everything that Draghi did, right? Let's own that, right? Because that's where we're at right now. And if she's come to that realization, going, you know what? If I'm trapped, let's work to the best way to alleviate what is going to be painfully clear, which is, hey, you know what? Time to acknowledge and work the best deal that we possibly can. That's the key here. There's no going back. I do the math. It would be so disruptive to the global system. Forget Europe, the global system, that the outcomes, I see no outcomes, but that would spell disaster. So if you get to that point, and I think that's what Lagarde, that's been the strongest argument that she's had, and I think it's the right argument. And I've said that after I thought she was a bad pick, but when I started to watch what she was doing, very important. So that's where we lie. And now with Merkel coming to her close to the end of her time as chancellor, because she wasn't going to run again, she has the ability to at least put some of this house in order. And the hell with the frugal four. They're not worth a crap. Yeah, I know everybody has veto power. But you know what? Germany's already moved, especially as you know, as I cited May 24th over that weekend when Schweible certainly made a massive pivot for him. And he's a very powerful point. You know, I'm amazed that when all these articles appear, even the ones over the weekend, there's no mention of it, the significance of that pivot. So it makes me scratch my head. Either I'm way off base or the world is just slow to catch up. But I still think that is a massive move, and it plays well to Merkel. And Merkel and Schweible have had their problems, but they know how to work together. So I'm at the point where I don't care about the frugal four, to tell you the truth. Not for a moment, because they're all beholden to Germany anyway. Where are they going? They want to pull out of the euro? Fine. Then the Dutch can go back to the guilder, and it will resemble the Swiss franc. And we see what the Swiss does. You know, the Swiss are forever fighting, like last week, and how the world just sits back and goes, well, that's not currency intervention. The Swiss told you they're going to do everything they can to weaken, to keep the Swiss, you know, from appreciating. Well, if that's not currency intervention, oh, I know, that's monetary policy. Well, it's always a question of where they cross, but regardless, that's where we sit at here. So, and I think the world is waking up to that. And when I look at the dollar, I'm really, and I understand, you know, I'm probably was one of the first to talk about back in March that the Fed was going to have a problem because there was a dollar shortage in the world. But that's a short-term tactical thing for the dollar. Right now, the United States is doing everything in its power to weaken the dollar by making sure there's ample amount of dollars out. And interesting that last week that the swap, you know, even
just going to ask you about that. Just going to ask about this, yeah.
That the swap lines, some of them were being wound down, or they weren't, well, not wound down, but they weren't making calls for more. You know, they had weathered the storm, so to speak. So, and yet the world see, you know, and I saw it, and here's my key to the board. This may surprise you. Now the euro has performed, and again we talk about it. And Friday's performance was abysmal because first the euro rallied as it should have, based, and then it spent the rest of the day based on comments coming out of the European Union. But when I was reading those, I said, "Wow, excuse me, one minute."
God bless.
Thanks. Yeah. When I was reading those, I said, those aren't as bad. Merkel says they'll have a deal done by mid-July. Macron was certainly on the rise. Merkel's numbers are improving. So they know that there's work to be done here, and they're trying to do it in a more positive way than they have done. So I'm actually, you know, quite bullish to euro, but I trade the pivot, and the pivot is, you know, we've struggled with that pivot. Let's see. Let me put up the 200 week in the euro is 113.33, and I'm using spot, by the way, so not the futures. I can certainly do the futures, but I'm looking at the spot. 113.33. It's held it and held it and held it. Now, correspondingly, I'll look at the 200-day in the dollar index. 96.43.
Yeah.
I mean, those are like, you can write those, and that too has been a pivot for the dollar index of late. And it holds and it holds. But what you do see is the correlation between dollars and equity markets you know, and people write articles about it, but I watch it very closely in real time. I think it's significant. And some of these are starting to break down. Now, my key to the real breakdown today, believe it or not, as much as I like the euro, I'm long right now. Euro, I came in that way. Friday was not a great day in that, and yen. And now it's been the euro yen, of course, and euro yen's making new highs as we speak. Let's see where that is relative to this is how well this is all going to set up. Oh, and the euro yen 200, which is 124.50, and we're trading 120.39. We'll take a look at a 240 minute to get a better picture. Now, last week's high, believe it or not, in the euro yen, the cross I'm talking about, if it's too sophisticated for you, and I don't mean that as a slight.
No, it is.
Okay. Well, I'm not just talking about you, but we'll pay attention to it because I don't do it in futures terms. I do it in cash price because why? Because the cash price is a 24-hour chart.
Yes.
So it never stops. So my data is totally complete. There's no gaps. It just is what it is. So I like that. So we're, now we're making overnight highs. Got a long way to go because the euro was far stronger against the yen. But I'd like to see both of these rally strongly together. That would be a very important tell for the dollar for me. See, now the euro rallies, they sell the yen. So we go back into that mode. Yen is still higher, even with the equity market, so that risk on, I really need to see that break down. I would love to see from a technical, okay, now I'll go to futures. Will that be easier if I talk in futures in the yen?
Yeah, for some traders it would be. For me,
okay.
For me, spot.
All right, so let me go to the yen. The yen, okay, we're above the course, 200-day, we're well above it, but it pivoted around it all the month of June, 92.48. And you know what? Sometimes these are mean reversion. That's what I use moving averages for, mean reversion. So, and if if you're an expiration baby, if you like to play the expirations, 93.19 was the high of the June on the expiration date of the June, which was last Monday, by the way. So that becomes a nice support level, and you can see that it's kind of held in here. But I'd really like to see the yen. If the dollar, they all need to go up together. So I'm probably a little ahead of myself here, but it is something that I'm watching, because when they go up together, then the previous algo correlations of this is happening, yen. Risk off, nonsense. That's my comment. I'm not going to say more than that. Nonsense. It works when it works, but over my years, sometimes it's just like what we used to call petro spread. That had correlation ability too. So when oil prices were going up, you got long British pounds and short yen. That was a petro spread, believe it or not.
When did that stop working?
Oh, years, 30 years ago, 25 years ago. Because Britain had other problems. But I will tell you what, that concept was created on the IMM floor, believe it or not. The bank, because I know, I was trading a lot with the banks. I knew a lot of bank guys, and they would come visit, and they would laugh. What kind of petrol? And then all of a sudden, they're quoting it back to me. Because it did have a relationship, pretty good, especially after Thatcher, got aggressive and the pound, and then they threw in the energy market. So yes, and again, it had staying power, but all these relationships break down. The probably the most reliable fundamental over years. Now it breaks down at times, and it's actually a good sign when it breaks down, is interest rate differentials. When the world is in a pretty quiet place, interest rate differentials are probably the driver for relative value of currencies.
Which all circles back to records amount of cash when we're talking about, well, no, it doesn't, does it? I'm reading that wrong.
Well, there's articles all weekend about, that the emerging markets are starting to better. Why? Because they have better return. But that's for now. Well, when money starts, you know what? Ira's first law of money, right?
No, but I'm writing it down.
Okay. Money is fascist. Now, before people take umbrage at that, understand what that means. Because to me, as a graduate student in political science, if you want to talk about fascism, to me, fascism is the craving for stability. What was Mussolini's cry was he made the trains run on time. So from times of disorder, people are willing to sacrifice their liberties and freedoms for stability. That's in a much more academic view of it, but it's the same thing with money. When money stops chasing return and only wants safety, then money's fascist. And it's willing to go to places to get it that you and I may not necessarily like on a political basis. I don't want to be in Chile, but if Chile's paying 6% and the rule of law resides in an autocrat, I may be willing to park my money there. It craves stability, or sometimes it doesn't want any yield and just wants safety, right? I don't care about yield. And that's a very important tell in seeking relative values. When they shun a real return of money, it's like if I were to put my money, well, for a long time in Brazil, when the Brazilian real was strong, Brazilian interest rates, and it's not that long ago, by the way, were up at 14%. Now we're down, I think, to 3% or maybe lower. But it had a real high rate of return. But then when you get nervous, it craves safety over return. And that's really the basis of my analysis.
So we're no longer looking for we're no longer looking for return on capital. We're just looking for the return of capital.
Right.
And then that would account for last week. Well, no, not for last. Well, yeah, for last week, for the end of last week, and overnight strength in the metals headed up to these big resistance targets up at 1775-ish. And
right.
That all right. That was so. While I'm reading, I tried to this weekend. I tried to spend as much time just relaxing and reading as I could. Last few weeks have been taxing. Mm-hmm. And that's where I kept getting bogged down. I kept getting bogged down in the disjointedness of the entire system at this point, all being fed by printed capital. So I wasn't surprised to see.
Hold on, let me close my door because now I'll start grinding trees. Okay, sorry. Yeah, well, the world is here. To put it right, the world's awash in liquidity right now. Right.
And yes, and so yes, all right, yes, exactly. And I lost my train of. Oh, I wanted to ask you about to circle back real quick. The significance of other central banks backing away from using the dollar funding on every. They were doing it every day, and they're now what, twice or three times a week.
Yep. Yeah. Well, now they evidently, when they back off of it, they have enough dollar funding right now.
Okay.
And there is so many dollars. There's been so many dollars put into play, and we know it's not going to stop because Powell told us it's not going to stop. Yeah, he may take days off, But okay, but there is a lot of dollar liquidity now pumped into the system. They did what they had to do in that regard.
All right, that makes it make more sense. So they've got plenty of reserves too. They don't need to keep going back to the window, so to speak, on a daily basis at this point. But and that's why I thought that the timing of Wiedmann's comment about the recovering being a slower process was kind of interesting. And maybe it's just I don't understand enough, but it just the timing of it made sense.
Well, you know what? It does get it. Let me tell you what it gets interesting, because Wiedmann's been awfully compromising of late in his words. And I listened to him closely. I got to go back and read today's. I just read the quick, basically, headlines of it. But, Herr Wiedmann is an interesting man, and he's no lightweight. Again,
no.
But none of these people making noise are lightweights, by the way. So you are getting support, and Merkel's getting support in interesting places. So, I mean, these are good catches, and they need to be dealt with. Now, you know, I'm looking at the board, and something's irritating the markets.
Yes.
The S&Ps are holding, but you know what? The futures closed 40 handles discount to the cash.
I've never. I don't know that I've ever seen that big of a discount. In my career,
it's been years. People wrote maybe 30 years.
All right, well, that would make sense.
I was trying to follow some of the discussion.
That was going to lead into my next thoughts.
Yeah, go ahead.
Well, what would account, or what's the significance, and what would account for such a gigantic discount to settlement, to the quarterly settlement?
I don't know. You know, I trade the equities. I understand to me the major fundamentals of the equities, but what would prompt that? Don't know. It's not like, you know, in the currency markets, I have a much better handle for that, and I could talk much more knowledgeably. That I can't. You know, especially because it was, you know, a triple witching day, quadruple, whatever number we assign to it now. So I can't. I don't know.
Only to have the again, only to have such a big move in gold, you know, all the way back up a day and a half later, and I wondered how much of that spooked the market, so that the return of capital didn't become so important again as the return on capital didn't become so important as return of. Where are you going to put money, especially with the dollar coming down? Just all of this, then putting it together. I know that Randy, if you're here, I know that you've got some questions and follow-up stuff that you wanted to jump in with too. So feel free anytime.
Yeah, hey, please.
Thanks. Hey, Ira, this is Randy. How you doing?
Good, Randy. How are you?
Good. I've got a few here trying to kind of piece together the overall money trail here a little bit. And looking at the U.S.-China relations, I noticed that Trump's kind of backing off any additional sanctions, for one, and potentially even enforcing the ones that were already in play. So I wanted to see what the update is on the relations there, and then how that relates to, you know, the overall commodity space. Obviously, part of the agreement, part of the deal in the grain market. We're starting to see a little move in soybeans, but I don't know if that was a demand supply issue or if that really had any impact based on the negotiations. And then the other one that, and there's a few, but the other one that's really standing out now is the bid on copper. And, you know, a lot of times that signifies health of the economy, especially in the industrial space and construction. And if that's tied in at all to these negotiations, China in general. And then the last one kind of offset from that would be in the overall construction space. Obviously, we've got existing home sales down, defaults are up, but I noticed lumber just had this really nice move over the last month. And generally that's obviously during the springtime because construction starts picking up, and it's kind of divergent from what the data is telling us on, you know, the housing market. So is there another reason behind that? Is that strictly a supply issue and that's why prices are rising?
Well, okay, so let's work backwards. Now, the guys who I do some consulting for, they've been watching the lumber and sent me several hits on Thursday and Friday. Just pay attention to it. So yeah, and it's not really something that I watch probably as much as I should, but sometimes you have to look at the tariffs on the lumber too that drive prices. So, you know, I don't know. I really get, because if tariffs are involved, you know, because so much of the lumber imports come from Canada. So, and there may be low stocks because of, you know, shipping through all of this and things being down. So they may be rebuilding the inventory. So that's what I would look at. And I haven't, so I can't speak to it, but either a tariff change or that inventories have gotten so low that you're seeing some rebuilding now, and that's driving lumber prices higher. So I don't know. We're working backwards. So take me to, on the China situation, okay? Because it's interesting. Silver is giving back its whole rally.
Yeah.
So when we go and look at the China situation, now the headlines in the South China Morning Post over the weekend were Brazil and China. And, you know, was Brazil trying to follow the United States? And would that create, you know, bad situations for Brazil and China? And the article said no, because Brazil produces way too many soybeans and China needs soybeans. So they'll find a way to work through their problems. So is that responsible for the US? You know, the bean rally is kind of interesting because it came right after, of course, a massive Brazilian harvest, and the Brazilians with the real up at that time was up at 5.8. And I had written a blog piece about all-time highs for Brazilian farmers, you know, based on currency valuations, which it was. So China needs food. The world needs food. Food, that's why if I'm building a portfolio right now, people say, well, where would you put your money? I said, well, go and do your work and look at ag stocks. You know, the quality ones with as low as debt possible, with a nice dividend. They've been underappreciated. Everybody hates them. You know, there's no pizzazz to them. But if you think the Fed's going to be successful, as other central banks, and what's the measure of that success is creating inflation, because nothing will burn off the debt load more than inflation. So if the Fed is successful, well, then I want to own things anyway. Or as, you know, Dennis Gartman would famously say, things that you can drop that hurt when you drop them on your toe. No, a bushel of corn will hurt if you drop it on your toe. But the beans have been acting pretty nicely here. So there's a lot of global demand out there. I'm not sure about the way. It's a little too early for a weather market, unless the Midwest is going to get really, really hot. But from what I saw this morning, it looks like they're expecting rains, and that it's not going to be as bad as they initially thought. But I happen to agree with you. But those markets are holding in. And then, of course, if we go, which I didn't understand the meeting last week in Hawaii, not that it matters whether I understand it or not, the meeting in Hawaii between Pompeo and the Japanese foreign minister, and that they came out, you know, pretty, you know, that they would adhere to the phase one agreement, and Lighthizer seemed to be, you know, so those are all fairly positives for the market. And now the copper, and for the first time, I'm not looking for copper to be driven by the Chinese. I'm actually looking for it to be driven by Europe and the U.S. and a few other places, because I think you're really going to get some infrastructure programs. If you don't, then you know what? Everybody in Congress should be voted out. These people are dumber than rocks, because this is what they've talked about. This is what they've wanted. The country certainly needs it. We're already 12 years on from, outside of LaGuardia being rehabbed. There's massive amount of infrastructure work to be done in this country. And as long as you're just throwing money around, you may as well invest it in something tangible. Roads, bridges, airports, we can go on, that need to actually be done. Because you've already thrown caution to the wind, budget process, no problem. Crank it up. We got all we need and then some. So that's why I'm more bullish copper. And especially if there's a green initiative, because if the Democrats take both houses of Congress, possible, the one thing certain you'll get in infrastructure is a green process. Now, I'm not in favor of government. Government spending has a multiplier effect, not just in dollar terms, but a lot of good. Your cell phone comes out of NASA space program. There's a lot of ancillary effects from government research and spending on projects. So I think you'll get a massive green program. And there's no question from everybody I talk to of intelligence that when it comes to these programs, that copper is a major component. Electric automobiles, building a, repairing, which needs to be done to power grid in this country, putting up windmills, we can go on and on. Copper is a big component. So I'm just, that keeps me, and then Louis Gavet, when I did that, I don't know whether you listened to that podcast, when I did that podcast a few weeks ago, he was really on top of the copper and understood all its, ramifications, besides the fact that copper is probably the most important metal in defeating the pandemic, because copper cleans easier and better. So you look for a lot of use in of copper as we go forward here. So all reasons. And China's the least, because China says they're not going to go on a massive spending program here. That's what they openly say. We'll see what happens. But it is time for other parts of the world to really step up here, because they've been missing in action for probably 2 decades or 3 decades already when it comes to real infrastructure spending. Does that, Randy, does that
yes, sir. I appreciate that. And I know there'll be others that'll ask this, but obviously you talked about the metals, mentioned gold, but just understanding this recent move, in your opinion, are we starting to see the next leg up here?
I think so, because listen, you ran into a headwind at, I don't know what, look at the high that was made at 1779. And actually I've traded the whole range. Last night, Maddie, that I put in wish orders, so I had gotten out. I was long ago.
That's a great question. When will we be flattened up there?
So, I put in wish orders. So by the grace of God, I had gotten out and I put in an order because I had it from Friday's close at 53.80. When I woke up this morning, I saw it. I got to feel like, what? How can that be? Because when I went to bed, it was trading 15.74. I am in Arizona, so my time schedule is far different. So the gold, somebody is definitely sitting it on here. Could be some hedgers. Somebody doesn't want it, but there seems to be a move to push it higher. And again, now we need it against the dollar. So that's why, Randy, you're so point on, which is why I'm looking at the currencies here, because I would like to see an old fashioned type of bull market away from dollar assets. So a bear market in dollar assets. So if the currencies, I don't want the gold to really gain any more against the euro. I would like to see them kind of all go together here. That would give me a far better view as to what's going on in the world. We haven't seen that. We haven't seen that. I mean, look at where we at for the year. And let me hold on. Let's put real numbers to this. So, okay. So if we go back to December 31st, the dollar index closed at 96.50. Okay. And it's not necessarily a great proxy, but it's what we'll use. So 96.50 was the close on December 31st. We're trading 97.13, so the dollar is actually higher on the year. But we know that gold is up, what percent? 14, 15%. Let's see. Gold closed. Yeah, we're up $230 in the gold. So it's been the dollar going up with gold, which of course, you know, if you listen to CNBC enough, they'll tell you that that's not possible. But we know it is possible. So gold has done yeoman's work here. It's entitled to drag here and allow some others to catch up. But if this is going to be a bona fide where you're really getting significant movement in global assets, I would look for some of the currencies to outperform, and the gold to come, you know, pursuing it. But that would also mean that silver will probably outperform. And right now, you know, here's a classic case. We're coming into it's June 22nd, so this is the last week for trading July silver, because you'll have to roll over. Next Monday will be first notice day. So we'll watch those deliveries in July silver. That will be interesting to see where they take us to. But it's okay. But the gold, I mean, really, when you look at it, it's pushing up against those highs. Can you hear me?
Oh, yeah.
Okay. So you know, I mean, the highs have been, I'm using a continuation chart, you know, up at the 1789. And again, we just got rejected. So interesting that we did get rejected. Now, if the gold were to close here today, but the euro were to close above the 200-week moving average, I'd say, okay, we're on to something. And it's okay that the gold lags a little bit. It's not always going to be the dynamo. And a lot of people are long it. So then you got, you know, the algos who will look for different relations. Oh, the gold, how can gold be up? But the gold's going up with a stronger dollar, with a stronger S&P. So it's really showing you that it is now, you know, gaining in ascendance as something to have in your portfolio, because it's defying everything that should make it hurt, right?
Absolutely. Thank you. I really appreciate your responses.
You know, and I'm not a gold bug. I would prefer that gold was $41.35. I would prefer that, because that would mean that the world was in a much better place.
Much healthier.
But the gold is, and I'll sustain. You have never heard me say that gold's a hedge against inflation. It may ultimately be, but for my money in a fiat currency world, and I've been as consistent over PAX, how you've known me probably 20 years. Yeah. Anybody who's ever talked to me about it, that's what I'll talk about. It's a hedge against central bank losing their credibility. And if you don't think we're in that realm now, you know, I know that Wall Street applauds the Fed because, hey, if I was making your job relatively easier, you know, and to buy the dip mentality because, you know, the Fed is there, you know, I would applaud the Fed at every turn also. Now, it's not to say that what they did, that what they did in March wasn't important. It was. But I can go back to numerous other parts where they've screwed up tremendously. And that was Powell. And I don't know, Pax, what I was saying. I don't know. 2 years ago, it's almost 2 years today, July 10th, 2018, I was on with Santelli, and you would really be amazed. I was just going through archival stuff of mine because now I have some time that I'm not writing for the moment, and I saw this piece, and I had talked about July 10th. I'll send it to you, Pax. You can.
I remember that conversation with Santelli, actually. Yeah, please send that clip to me.
Yeah, we talked about, hey, the Fed is, what are they doing here? You either do one or the other. That was July 10th. To either raise rates or shrink the balance sheet. That was a real conversation. And what did we talk about? The yield curve. I said the yield curve is sending signals that's telling them that they have to do, that they can't follow this path. And of course, then we got to October, and the stock market wound up, dropping 22%, 23%. But I'll send you. I was, you know what I said, and now it gains that interview actually gains ascendancy right now, and I'm going to tell you why. This morning, the what's his name? The head of the he's the new governor of the Bank of England. Talked about that it will be. I don't know whether you saw this, and I applaud this. And the pound actually turned around and rallied on this. That the first step that they would have to take is to shrink the balance sheet when they got right, when things started turning right, shrink the balance sheet. So it should, here, let's see exactly how he phrased it. That he's already looking to an exit strategy, which my criticism of the Fed is that they have no concept of an exit strategy. In fact, whenever they do, and the market, has a tantrum, and I still say the greatest mistake of the last 9 years in banking was Bernanke giving into the taper tantrum when he announced that they were going to shrink the amount of bonds. So that was critically important. And now here's the new governor of the Bank of England saying, yeah, we had to increase quantitative easing, but when things really start to, the first thing we're going to do is shrink the balance sheet. Now he's telling you that. See, he's getting out ahead of them. That's what's important. Because now the market cannot be shocked. He's told you, we're going to shrink the balance sheet. That's an exit strategy. The Fed never has one. And every time that they present one and the market throws a tantrum, they go into hiding. Just a fact. That's what they do. They cower. You know why? Because that's what academics do. You're talking with an academic mentality. And again, my criticism of it is, and that's what makes gold a powerful force in people's portfolios who are looking to at least sustain the value of their underlying assets. They cower. They just, and that loses you credibility. Bernanke made it critical. He should have stayed the course. Let the bonds do what the markets are meant to do. That markets will signal to you when you're right and when you're wrong. But if you don't respect them, but you fear them, you're always going to be making mistakes, because it's like dealing with somebody who living in your house who is so prone to psychotic behavior. You walk on eggshells. The Fed cannot afford to walk on eggshells. The Fed has to be, hey, this is what we did this way. We were so selfish. Listen, they have no problem cutting rates 1%, right?
Yeah.
But they walk with trepidation, raising rates 25 basis points. And there's the asymmetry in motion. And that's why people are doing reassessments. Where am I? What am I doing? What does my portfolio really look like? Because again, there is no exit strategy. And you can say, well, how do you know? Well, again, you have to prepare the markets for what's coming and let them deal with it. Hey, you want to stay too long, even though you know money's going to be tightening? That's on you. As they say on the street, my bad. Okay, deal with it. You're going to get wet.
Do you think that the lack of the Fed addressing anything along the lines of an exit strategy is in and of itself and a nod towards MMT as a new exit strategy, if that is anywhere on base?
I can't go put words into his mind, MMT.
No, of course not.
It sure looks like it. I mean, it doesn't pass the scratch test, so to speak. The smell test better. It just, it really gets scary in that regard. Where are you going? And again, I said it weeks ago, and as soon as I hear the language, they're a social justice organization.
Oh.
Do you need more? Is it not clear enough to everybody now? This is a social service organization. Listen to his words. He means them. And again, from a moral standpoint, I don't disagree. But I don't want to, I criticized Yellen for the same thing when she went on those Fed Listen things, and being that she's a labor economist, I understand it, and it's painful. But that's not what your role is. Your role is to set monetary policy to fit a growing economy and everything that comes with it. But that's not the language we're hearing.
It's also not the questions that they're being asked by Congress, nor the direction that they're being nudged by the White House.
Oh yeah, that's right.
So they're becoming a social activist, along with well, they've always been political and without being political, but the lack of exit strategy now is and I guess trying to read into it and as traders, that is where we get into too much trouble, and so much trouble is trying to read into something that may or may not be there. The market will prove out to us whether or not it's there. Is very daunting, which is why I think that we can look at gold. From a trader standpoint, I want to see gold close above that recent high twice. We got that, then we've got a second leg coming. That's something I learned from you guys.
Right. But it's from a technical standpoint, it's doing really what it's supposed to be doing. It charges ahead and it corrects itself. There's an article that just came out on the FT German finance. Here's the headline: Berlin and ECB signal end to legal impasse over bond buying. Okay, so they're doing everything, and they can, if they wanted to break it up, they had the opportunity in the wake of the German high court ruling. They could have just then crushed it all, but they don't want to. So I'm going to keep my eye on these currencies today. Again, we're back in. So the euro's up 70 ticks. Sorry, I always go to my floor trader mindset, and the yen's basically unchanged. Let's see what happens. Let me see some. I have some really good ideas. Yeah, I would really love to see the yen. The yen is, to me, the critical currency. Just take a look in the futures terms. Oh, we're in the 200-week. Yeah. So, like to see some upward movement, especially with everything around it, because that's the important thing. And if you saw what Asia did, the Asian currencies, meaning the Aussie, the Kiwi, had sizable rallies last night. The Aussie actually put in a nice trading action, and there was news out from Governor Lowe. So these are the things that I'm paying attention to. And again, I am so dismayed with the central banks. Not that you go, well, who cares whether you're dismayed? Nobody, except I'm trying to put bread on my own table. So you know, I try to put these into action if I'm right. So I have to monitor them closely. Now we got gold moving back. You know, gold had a I was with you guys. It had a $15 break.
Mm-hmm.
Now it's mid-range. The S&Ps are moving back towards their highs. Again, for what reason? The news, you can't tell me that when you look out on the horizon that you see anything of great benefit. And again,
no.
One thing the equity markets don't have to do is fight the Fed, because the Fed has told us, right? As Powell says about all the unemployed people, they didn't do anything wrong. That's the social justice comment. Because how do you rectify that? They didn't do anything wrong. Well, what am I supposed to do? I'm gonna be sitting on my hands. My palms are gonna be out, pushing money into the system. I will not be taking liquidity back. Okay, how's that?
And I saw this morning I saw a headline in the FT about the emerging markets, the sell-off that the emerging markets had in March. They're just awash, was the word.
Yeah, I read that. I read that piece. It's exactly right. Awash.
In liquidity. How this ends.
You know what? And if you look at, you know, and then I'll finish up, but going back to Randy's questions, you know, keep your eye on the Bloomberg Commodity Index. These are important because if the dollar really begins to weaken, you will get a bid to the commodities. How high they go, I don't know. But watch the indexes for a good sense of it, which is why right now the only stocks that I'm buying, because I am putting some money to work, but I'm very selective. It's all mining and agricultural stocks. Now, I had somebody who's a very successful real estate person who said, well, you're not going to make any money with that. You know, he's looking for a big bang. I go, yeah, that's okay. But at the end of the day, this is my retirement money. And if I'm not looking for big bang, I'm looking for if I can generate 10 to 15% annual return on that money. Now that's a hefty return. I'd go to jail if I told you I could promise it. If I said, I'll guarantee it, you know, you call me Madoff. But that's investable money, and I'm looking for the best return with the lowest risk possible. And when I do my homework, and I go, well, what is the Fed trying to accomplish here? The Fed's trying to accomplish inflation. If the Fed doesn't accomplish inflation, they've failed miserably.
Especially with the dollar weakening.
Yeah. Yes.
We've got one follow-up question, Andrew, are you here? Andrew from
can you hear me?
Yeah, from the UK.
Yeah, can you hear me?
Yes.
Yeah. Hi, I'm Andrew from the UK. Ira, it's a pleasure to talk to you. I put forward a question a while back. It's on a chat about platinum and its uses, you know, going forward with hydrogen and fuel cells, and because I've been looking at some platinum-based electrodes. But really, my question is more generalized and really to get a feel of your understanding about quite often before, you know, the final leg of perhaps a bull run, or before, you know, the big sell-off in 2000, I think certainly in 2008, you see the industrial metals, you know, tend to spike up quite significantly, platinum especially.
Wait, Andrew, say that again. I missed that.
Okay, so just before, I mean, towards the end of, well, you know, before a sort of market crash or market turn, a lot of the precious metals, especially the industrial precious metals, tend to spike up quite high, you know, hit new highs and, you know, almost go sort of parabolic. My question is really about the precious metals, the industrial ones, silver, platinum, palladium. You know, where is the value? Is it the demand side, or is it the precious, you know, the fact that it's a precious metal, the fact that it's a source of value for, you know, people to hold on to? Or is it the industrial demand that really drives the price? I mean, obviously the falling dollar currently seems to be a catalyst, but I'm just trying to get an understanding of the push and pull between industrial metals demand on the industrial side versus perhaps at the moment when the industrial demand is less, that the precious element of them becomes more valuable as well.
It's a question I'm dealing with now because, okay, I remember your question because I think we thought, I've been involved with Ballard Power back and forth for over 20 years, probably since 1998. I became interested in hydrogen fuel cells. And that stock has been one roller coaster ride. And believe it or not, I actually bought it back in January of 2019. I'd been out of it for years and years, but I will always watch it because I read a piece that I really didn't know that the Chinese owned, I think, 25% of Ballard Power, and they had big movements into hydrogen. And the Japanese, meaning Toyota and Honda, have not given up on hydrogen fuel cells either, by the way. So it was very fortuitous. I read it. It was a big read in the FT on hydrogen fuel cells. You can go find it. It's a very interesting read. I think, it was definitely January of 2000, maybe January 3rd, 2019. So as far as the amount of platinum and palladium, the platinum got hurt with the diesel and it has never recovered. But on a historical basis, you're at almost all-time lows for the price of platinum versus gold, which is, and the reason I watch those two, because the Asian world, they always were bigger buyers of platinum for the precious metal effect. I don't know if you know that, platinum jewelry, but they were bigger buyers of platinum. And, if you go through, where that spread right now in dollar terms is negative $916. If I take you back to, May, or let's say January of 2014, it was a $200 premium, platinum to gold. So you'd really want to take apart why. I mean, that's an $1,100 move in a bullish precious metal environment, right? So what we have seen, though, is when we have more algo, and this is not a comment good or bad, it's just reality. The algos, when the equity markets are up, seems to be more demand for copper and the industrials. And when the equity markets are vulnerable, gold will outperform. They may all go down, but gold will hold up better then, because then all of a sudden nobody wants the industrial aspect of those metals. So you have platinum, palladium, which have industrial. Palladium, not so much precious, but platinum certainly a precious metal. Silver, we have seen funky things, that when the gold silver ratio ran out to 120 to 1, 120 to 1. The all-time high had previously been 98.5. All time. So we've seen, and I think it's algorithmic money because it gets really aggressive and can break the back of certain long-held views. So we've seen that play out. You'd have to go back and look, and I would look at that, those levels up at $200. I don't think that was the all-time high, by the way. Actually, the all-time high in platinum gold. Are you ready? In February of 08. Oh, remember that time period? February 08. So number one, you had the Chinese very aggressive with fiscal stimulus, right? Because as the world was beginning to melt down, we hadn't even gotten to Lehman yet, but we knew that March comes Bear Stearns. But that spread with the dynamic Chinese fiscal stimulus, that went out to $1,100. You want me to say that again? So we've had a $2,000 spread from that high to the low we're presently at on a monthly basis, by the way. So there's a lot of work to be done in there to understand, but your question is is spot on, because this will turn. In fact, I look at the platinum as a sign of, and that really proves it, February of 2008, as a sign of when Asia really starts to turn and their economic prospects really start to turn higher.
Yeah, it's almost like which one is a leading indicator of,
exactly.
which one turns first. Yeah,
exactly. But I'm watching it because I know it's never the same, but I know that has to play out. And the fact that, we just can talk about February of 2008, it will show you when Asia is booming and China was, again, they were the ones who saved the global economy through their massive amount of stimulus. So it's really a good place to look for that reason. I hope I answered your question.
Yes, completely. Thank you very much.
Thanks for the question. That's what makes this worthwhile. Anything else before I...
Anybody else have anything?
Good question. Really, that was a very good question, because it makes me think, again, all good questions do. And you know what? Put that one right on the radar.
Oh, Ira, thanks again for such a great conversation. Yesterday, my last Credelli TV show aired, and I tried to keep the topic simple. I just tried to keep. Anthony asked me the genesis of the conversation was to be about what's my edge as a trader. So I just kept it simple and talked about execution, and I had said, if there's anything I need to know fundamentally, I've got Ira Harris to ask questions from, as I have so many other years, for so many years. And, but, just to try to get so many traders that are either new to this business or just trying to figure out how to become consistent, just try to keep it simple in the beginning and build your habits and understand your process, learn your process. And then we can start to incorporate so much of the macro picture into our trading. And so it was a good conversation. I do as I always did. I spoke a little bit too much before I got to the heart of what I wanted to say.
Yeah.
But it worked well, and I think that today's conversation is a really, really good follow-up for a lot of the questions that I had, and I know that a lot of the other traders had, just about what's going on in the world right now.
Hey, you know what, Matt? At the end of the day, people have told me for 40 years that I overthink this. I'm still here. There's sometimes I'll think my way out of trades, but so what? When you really understand this, like Friday, there were so many different trades on Friday. Okay, there were trades. They weren't investments. I had a big picture view, but look at how many round turns. I emailed to Judd at about 11:30. Well, 11:30 my time was 1:30 afternoon. I was short S&Ps. I had covered them, and I sold the rally because I had a level up at 3102.5, and I got filled. I went to so I said I just sold a 32 handle rally. I can't believe it. You know how many trades there were like that? Mm-hmm. Just trades. I'm not talking bigger concepts in that. Just trades. Just trades.
And that's how we get to the bigger concepts, are the just trades, the just trades, and then we build up from there.
There again, you find trades within things. There are opportunities within things, and right now, again, I'm watching it. I hope the S&Ps go up and retest at where was that area? 31 and a quarter. That would be great. And the yen rally with it. That is what I'm watching. I'm giving you, inside my brain as I'm trading today. So if I don't make a trade as I watch this unfold, but yeah, I keep buying little pieces. They keep enticing me into the end because the yen doesn't get put away today. But I want to, if the yen can rally with everything else.
What would you want to see if the yen and everything else rallied? Would you like to see gold rally with it?
Yeah, you know, at the gold, you know, with the it was interesting that it broke down and then it's rallying, you know, right back. Actually, I'm going to go with Andrew here. I actually bought platinum last night, and I made some nice money with my amount of that. You know, Friday was a really hard. The euro currency really dashed my little brains in. But now I'm looking at the silver too, coming into this expiration to see. Well, I know they've taken a lot of gold deliveries in the past. Let's see if the silver, because there's already a shortage of silver. So I'm watching that closely. And yet, you know, here we are back on the gold silver ratio back at 98.5. The all-time high in 1990-91 was 98.71. I just checked it. So we're right back into these levels with everything that's going on in the world. So I'm watching, but the yen is really interesting to me here because you know, when previous correlations start to break down, you know, that the market had put a lot of stake in, that's when I get really excited because that shows me all kinds of opportunity.
Well, there is a ton of opportunity, and I'm paying attention now to the yen. I don't usually pay attention to the currencies while I'm trading equities, but I am now.
But you know what? Again, I can't stress this enough when I'm in these rooms. Ask the hard questions.
Yeah.
Don't feel there is never a bad question, and I mean that. There's never a bad question. The only bad question is the one that's unasked.
Always.
You know, yesterday was Father's Day. I have 4 kids that I raised to kick my tires and ask me questions. If you're not asking me, if you're just, then nobody's doing any learning.
That's absolutely right.
And I did more learning off of Andrew's question than he did, I guarantee you. Because it forced me to go take a look at that. And wow, in February 2008, that made perfect sense.
I just pulled the yen up on my CQG.
Yeah, just take a look at it. And listen, it may spend the rest of the day breaking. I'm talking about in futures terms.
Yeah, of course.
But that tells me a story too.
Oh, these are good days. These are good, interesting days, and always days to have. There's going to be trades within trades, and there's going to be volatility within volatility.
Oh yeah, and we didn't talk about interest rates.
No, we didn't. I wanted to get to that too.
You know why? There's nothing to talk about as far as I'm concerned. But I will tell you, watch the year if you can trade European interest rate futures. Very interesting, especially if the euro were to start gaining ground, because then you'd see some more compression in the yield differentials.
With German and Italian, or just German?
German and French. You know, I actually came in. I put on a bit because I was a little nervous with the euro, so I felt I came in long the Bund and short the French oats. And covered. I mean, when the euro didn't really get beat up and started rallying, I covered. They let me out before I went to bed. So at 11:30 last night, I basically scratched the play, which to me was like a free insurance policy. Now it's still sitting there, but the Italian is outperforming everything today, so which makes perfect sense. Which is another sign for the euro. So again, because why? Because if I'm in the euros, I don't have to. You know, the Bund is negative, but if I build a basket of European debt, I can actually get to a 25 or 30 or 40 basis point yield on 10-year European debt if I create my own synthetic euro bond. Think about that.
Oh.
All right. I'm going back to work. This was work. No, I appreciate it.
This was
really
great.
Good question. Really good questions. This really, as I said, these are the things I want to start doing. These are the things that are mandatory for me. So, good.
I'm writing that down. Creating our own synthetic euro bond.
Yeah, I just wrote that down as well. Ira, Jack.
Yes. Jack. Yes, Jack.
How are you?
I'm good. Where are you at? Manchester?
No, I'm just outside of Blackpool.
Yeah, it's okay. What's the difference? Oh, sorry.
Not much. Not much.
I was watching the History Channel last night, watching the eviction from Dunkirk. So,
yeah.
75 years ago.
I'm short euro again.
More than that. But, was it 78 years ago?
So Ira.
Yep.
I'm short euro against yen, the cross.
You're short euro against the yen?
Yeah, I've been short for a while. I've been short from 123.45, and I'm just wondering, a close today. What would you say is a strong close today?
On the euro yen?
Yeah, on the cross, on the cash.
Let me take a good look. You ask a good question. I'm going to give you. I have to go to my notes. Let's see.
I don't like being on the other side of the trade as you see.
No, you're not. I'm on both. You're not on the other side. I do not have the cross on. Believe me.
Okay, yeah.
To me, to get verification that you're right, you need to close under one. You need to close under 119.80.
Yeah, got it.
Okay. If we hold over there, it's been a big swing point. So hold on. Now I go back there.
That's around Friday's low at the 200.
So we're doing some interesting work here.
And just considering taking some more off the short side. If we closed above 120.30 today.
You
know what? I look at Friday's high, which was what, 120.22, and that previous close on the 17th at 120.31. So this is a pretty good test area for you.
Yeah, agreed.
Listen, and I can understand. Let me go put up the weekly just to get a better. Okay, so were you short from 123 and change?
Yeah, 123.45.
Okay, so you got the 200 week up at 124.60, and it's been grinding in here. But again, you're not against it. And believe me, you'll make there are many people who've faded me over the years who've made a lot of money. But I'm long both. So you're not. For me, I'm looking for both of them to rally, if my dollar view is right.
Yeah. Okay, you're a star. Thank you very much.
Yep. No, listen. It's what I'm here for. So it's now so you force me to go dig deeper and take a good look, which is good because it helps my trading. That's what people don't understand. When I get to teach and talk and we filter these things out rather than go, well, I know everything. I don't know everything. I don't know most things, but I just try to know enough to be able to make a living.
You eat what you cook.
Well, I eat my own cooking. But so if we look at, where the euro is trading at, I would really like to see it close above Friday's high. I'm speaking the cash terms also. So we had a high of 112.55. We're trading 112.56 right now. I'd like to see it close above Friday's high, the euro by itself. So, all right. Good luck to everybody.
Yeah, Ira, thank you again so much. Great conversation as always.
Yeah, my pleasure. It's easy to do. All right, I hope we all learned something. And Pax, just send me a click and we'll know.
You bet I will.
Okay.
All right, thanks, Ira. Bye-bye.